Take question number 22. It is one of the IPCC examination problem for 10 marks. Generally, marginal costing, in this area, they can ask around 10 to 12 marks a problem in the examination. This marginal versus absorption. Now, let us see whether we are able to do it. Nothing conceptual. Everything has been already discussed. We can deal it as a practice problem for us to get the grip over our understanding. That's all. Can I start or not? Now, take question number 22. And today probably I will be completing the chapter standard costing also. Next class I will be starting with another chapter called as contract costing. We will be starting with the chapter contract costing. We will see if we feel all chapters are overloaded, then we can just do one or two small chapters like operating cost, etc. and also come back to the contract costing. Let us see how it works out. Can I start or not? Now take question number 22. ABC Limited can produce 4 lakh units of a product per annum at 100% capacity. Tell me what is full capacity? 4 lakh units. If they have not given normal capacity, then what is budgeted output? 100% capacity, that is 4 lakh units. Everybody understanding it or not? Now, next. The variable production cost is 40 per unit. The variable selling expenses is 12 per sold unit. Budgeted fixed production expenses were 24 lakhs per annum. Fixed selling expenses were 16 lakhs. During the year ended 31st March 2008, the company worked at 80% of its capacity. Tell me what is the actual capacity? 3,20,000 units. Respond, yes or no? No. It was 80% of its capacity. The operating data are as follows. Production 3,20,000 units. Already we know it. Sales 80 per unit. 3,10,000 units. Opening stock of finished goods 40,000 units. Can I proceed up? Now. Next. Fixed production expenses are absorbed on the basis of capacity and fixed selling expenses are recovered on the basis of period. Okay. That is the selling expenses are all period cost. Respond yes or no. And the fixed manufacturing expenses is what cost? Product cost under absorption costing system obviously. Okay. Next. You are required to prepare a statement of cost and profit for the year ending 31st March on the basis of marginal costing system, on the basis of absorption costing system. Everybody, can we start or not? No. I'll just give you 2 minutes time. Please make an effort to understand and know every fact given before we start with the solution. We'll do the sum together. Okay? Now, please go through the question quickly. Shall we start above? Okay. Now, first let us do under marginal costing system and then do under absorption costing system. 1 or 2 workings will have as a separate step and then go for the income statement. Can we start on now? No. Write down. First, part 1. Let us do it together. You should be thinking along with me, telling and writing. Okay. Part 1. Marginal costing system. Part 1. Marginal costing system. Part 1. Marginal costing system. Shall I proceed? Step 1. Units in closing stock. They have not given, but it is there. Right or not? Units in closing stock. Step 1. Units in closing stock. In examination, always even simple calculation, show the working so that they know what they are doing. Even if you commit a mistake in working, they know that they are able to understand what should be done. Are you following what I am saying? Now step 1, what is it? Units in closing stock. In that right, one below another. Units produced. Units produced is equal to how many units produced? 3,20,000. Everybody, units produced 3,20,000. Add opening stock. Add opening stock. How many units is having an opening stock? 40,000 units. Add opening stock 40,000 units. Units available to sell. units available to sell. How many units available to sell? 3,60,000. Already having 440,000 units. I also produce what? 3,20,000. Available to sell 3,60,000 units. Next, units sold. Units sold. How many units has been sold? 3,10,000 units. Units sold 3,10,000 units. Units sold 3,10,000 units. Can you tell me what the closing stock? Closing stock of finished goods 50,000 units. Closing stock of finished goods 50,000 units. Closing stock of finished goods 50,000 units. Respond. Are you able to understand or not? No. We have found out that there's a closing stock of 50,000 units. Opening stock of 40,000 units. Produced 320 and sold what? 3,10,000 units. Detail. Are you having the clarity or not? No. My question is, in marginal costing system, these stocks, opening stocks, closing stock, etc., will be valued at selling price or cost price? Full manufacturing cost or variable manufacturing cost? Valued at what? Variable manufacturing cost. Can you find out the number or not? Small step. Can I say? Write down step 2. Variable manufacturing cost per unit. Step 2. Variable manufacturing cost per unit. Variable manufacturing cost per unit. I think I should not have found out given. Okay, variable manufacturing cost per unit. In right, VMC is equal to, I need not have written that, only one number given. Okay, VMC is equal to how much rupees? 40 per unit. Bracket la given. VMC is equal to 40 per unit given. Variable manufacturing cost is 40 per unit given. Everybody having the clarity or not? Now, next. Step 3, marginal costing income statement. Step 3, marginal costing income statement. Marginal costing income statement. Okay, can we start or not? No. Have the 3 columns, particulars, computation, amount. Particulars, computation, and then amount. Okay, now tell me what the first item in income statement, please. Capitalize what? Sales. First item is sales. How many units sold? Tell me. 3,10,000 units sold. Into how much rupees? 80 rupees. Tell me the amount. 2 crores. 48 lakhs, sir. 248. 00,000. 2 crores 48 lakhs. Sales is 2 crores 48 lakhs. Can I go to the next item or not? Now, please tell me capital B. What is the heading of capital B? Variable cost of goods sold. Underline that. Variable cost of goods sold. Variable cost of goods sold. Variable cost of goods sold. Okay. Now, one by one. First item is what? Opening stock. In bracket at what cost? Variable manufacturing cost. Opening stock at variable manufacturing cost. How many units? 40,000 units into 40 rupees, huh? 40,000 units into 40 rupees. Gives how much? 16 lakhs. Okay, opening stock is 16 lakhs. Add what? Variable cost of production. At variable cost of production, I produce 3,20,000 units into 40 gives you 1 crore 28 lakhs. 1 crore 28 lakhs. Variable cost of production 1 crore 28 lakhs minus what? Closing stock. Minus closing stock. Again at what? Variable manufacturing cost. How many units? 50,000 into 40 gives how much rupees? 20 lakhs. Everybody, are you following or not? No. If I knock it off, I'll be getting the cost of goods sold. 1 crore 28 lakhs plus 16 lakhs minus 20 lakhs gives how much? 1 crore 24 lakhs. 1 crore 24 lakhs is the variable cost of goods sold. Everybody, I hope you're all following or not? No. Next, capital C. Tell me what is capital C? Gross contribution. Gross contribution. Okay. What minus what? A minus B. 1 crore, say 2 crores 48 lakhs minus 1 crore 24 lakh gives how much? 1 crore 24 lakh is going to give you capital C, gross contribution. Can I push it or not? No. Capital D. What is capital D? Variable selling and administration expense. Capital D, variable selling and administration expense. How many units I have sold? Tell me. 3,10,000 units. Look at the workbook and tell me what is the variable selling expenses per unit? 12 rupees, right? Huh? Okay, 3,10,000 units into 12 rupees. Tell me the amount. 37 lakhs. 37 lakh 20,000. Am I right or not? No. When I reduce this variable administration selling, capital E, I get as what? Contribution. How much contribution? 86 lakhs? 80,000. Contribution is 86 lakhs, 80,000. Now, F, what is item number F? Fixed cost. Fixed cost, manufacturing, administration, selling, all items are all items. Tell me what is the manufacturing fixed cost? 24 lakhs. So how much lakhs here? 20. Don't say it is budgeted. Budgeted is assumed to be same as what? Actual for fixed cost if we don't have a detail. Yes or no? Now 24 lakh. Plus what is selling fixed cost? 16 lakhs. What is the fixed amount? 40 lakhs. The fixed cost is 40 lakhs. G. What is G? A profit. Can tell me what is profit? E minus F. That gives you G. How much profit? 46 lakhs 80,000 is a profit. 46 lakhs 80,000 is the profit. Everybody are you understanding it or not? No. See. This statement in examination, they made it much more simpler or easier. I wrote this for your understanding. What you can say is very simple. In this 40 common, yes or no? 40,000 into 40 plus 3,20,000 into 40 minus 50,000 into what? 40. Can I take 40 outside the bracket? Huh? It becomes 40 into 40,000 plus 3,20,000 minus 50,000. 40 into 3,10,000. Yes or no? Romba simple. Variable cost is 40 into unit sold is what? 3,10,000. Variable cost into unit sold gives you what? Variable cost of goods sold. Are you all understanding or not? Variable cost into unit sold. He is going to simply give you what? Variable cost of goods sold. Don't get confused, sir. You wrote differently. Exam they presented what? Differently. Both are same only. I wrote elaborately for you to understand it. That's all. Everybody, yes or no? No. Write down. Alternatively. Write down alternatively. Just for you to note it down. Later I can just revise it. Alternatively. Variable cost of goods sold is equal to alternatively, variable cost of goods sold is equal to variable cost into variable cost into goods sold. Variable cost into unit sold. Variable cost of goods sold is equal to variable cost into unit sold, which is equal to 40 into 3,10,000 is equal to 40 into 3,10,000 gives you 1 crore 24 lakhs is equal to 1 crore 24 lakhs. And alternative way of presentation 1 crore 24 lakhs. Respond, are you having the clarity or not? No. With this we have completed the first part, namely part 1 involving marginal costing. Can we move to the part 2 or not? Write down part 2, absorption costing system. Part 2, absorption costing system. Okay. Can I proceed in that right? Step 1. Step 1. Calculation of Step 1, calculation of full manufacturing cost per unit. We value not at VMC, value at what? FMC. Calculation of full manufacturing cost per unit. Calculation of full manufacturing cost per unit. Can we start doing now? In that right, first. Fixed manufacturing cost per unit is equal to fixed manufacturing cost per unit is equal to BFO by BO. I don't charge the actual fixed cost per unit. I charge what? Predetermined rate, absorbed fixed cost per unit. So no, fixed manufacturing cost per unit is equal to BFO by BO. What is the BFO, budgeted fixed cost? What is the amount? 24 lakh. Whenever I don't absorb fixed selling, it is always what? Period. I only always speak about the manufacturing. Yes or no? It is BFO divided by BO. Budgeted fixed overheads divided by budgeted output, which is equal to 24 lakhs divided by 24 lakh divided by how much? 4 lakhs. In a BO is 4 lakhs. 100% capacity. 24 lakhs divided by 4 lakhs is equal to how much per unit? 6 per unit. Is equal to 6 per unit. Next line. Full manufacturing cost per unit is equal to, second line, full manufacturing cost per unit is equal to variable manufacturing cost plus fixed manufacturing cost. Full manufacturing cost per unit is equal to variable manufacturing cost plus fixed manufacturing cost. When I value the stock, I'll be having variable cost inside that as well as what? Yeah, unitized fixed cost, right or not? Variable manufacturing cost plus fixed manufacturing cost. Can I proceed? Which is equal to, tell me what is the variable manufacturing cost? 40 plus, or you're understanding and writing a 40 plus, fill up the blanks. 40 plus what? 6. 40 plus 6 is equal to 46. 40 plus 6 is equal to 46. With this, we complete the second step. Now, in absorption costing, will I value stock at 40 rupees or 46 rupees? 40 rupees. Stock will get a share of fixed cost also. It is stated as a period cost here. Right or not? Now, next, tell me next step, guess here. Step 3. Step 3 or step 2? Step 2. Okay, guess what is step 2? Under or over absorption. Exactly. Step 2 is under or over absorption. Step 2, under or over absorption. Step 2, under or over absorption. Can I proceed? Okay, write down. Absorbed overheads is equal to, absorbed overheads is equal to, I forgot, what the formula? AO into SR. Absorbed overheads is equal to actual output absorbs what? Standard rate. Okay, AO into SR. Absorbed overheads is equal to AO into SR, which is equal to, tell me AO means actual output sold or actual output produced? Because all units produce absorbed overheads, whether it is sold or not. Yes or no? It is what into what? 3,20,000 into 3,20,000 units into 6 rupees. And I absorbed how much fixed overhead? 6 rupees. Correct? 6 rupees? 3,20,000 units into 6 rupees is equal to how much rupees? 19,80,000. 19,20,000 is equal to 19,20,000. We absorb 19,20,000, right or not? Next, actual fixed overheads is equal to, next, actual fixed overheads is equal to, how much is actual fixed overheads? Tunga, yeah, what are actual fixed overheads? 24 lakhs. Actual fixed manufacturing overheads is equal to 24 lakhs. Actual fixed manufacturing cost is equal to 24 lakhs. I have spent 24 lakhs fixed manufacturing cost. I absorbed only what? 19 lakh 20. I over absorbed or under absorbed? Under absorbed. Right down. Under absorption of fixed manufacturing cost. 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 How much rupees? 4,80,000. Under absorption of fixed manufacturing cost. 4,80,000. Under absorption of fixed manufacturing cost. 4,80,000. Up to this, everybody having the clarity or not? No. Now we are in a position to go for what? Income statement. Can I proceed or not? Next. Step 2 or step 3? Step 3. Write down step 3. Income statement absorption costing system. Step 3, income statement absorption costing system. Income statement absorption costing system. Can we start up? Now, 3 columns, particulars, second column, computation, and the last column is amount. Particulars, computation, and amount. Shall we start up? Now, first, what is capital A? Sales. Capital A, sales. How many units sold? 3,10,000 units into what is the selling price? 80. That gives you 2 crores, 48 lakhs. Sales is 2 crores, 48 lakhs. From this, I have to reduce capital B what? Cost of goods sold. Capital B, cost of goods sold. First item is opening stock. What cost? Full manufacturing cost. 40,000 units into 46. 40,000 units into 40 gives how much rupees? 18 lakhs 40,000. 18 lakh 40,000. Add cost of production. Add cost of production. How many units have been produced? 3,20,000 units into 46. You know that 6 rupees is the absorbed overhead. Right or not? Tell me how much rupees? 1 crore? 47 lakhs? 20,000. 1 crore 47 lakh 20,000 minus closing stock. Again, value at full manufacturing cost 50,000 units into 46. 23 lakhs, sir? Minus closing finished goods is 23 lakhs. Can you knock it off and tell me what is the cost of goods sold? 1 crore 42 lakh 60,000 is the cost of goods sold. 1 crore 42 lakh 60,000 is the cost of goods sold. This is capital B over. Yes or no? Now, what is capital C? Gross profit is A minus B. Capital C is gross profit A minus B. 2 crore 43 lakhs minus 48 lakhs minus 1 crore 42 lakhs 60,000 gives you 1 crore 5 lakhs 40,000. 1 crore 5 lakh 40,000 is a gross profit. Am I right or not? Now, next D. What is D? Selling, administration and selling overheads. Administration and selling overheads. When I say administration selling, it is variable, fixed, variable, unfixed, variable, unfixed. Both are period cost only. Yes or no? Now tell me what is variable cost? 3,10,000 units into 12 rupees. Am I right? Plus fixed selling overheads is 16 lakhs. Okay, 16 lakhs. 3,10,000 units into 12 is a variable selling cost, and 16 lakhs is what? Fixed selling cost. If I multiply, add it, what is the number? 53 lakhs 20,000. It is 53 lakh 20,000. Everybody, are you all following or not? No. Next E. E is what? Under absorption. Under absorption. Under absorption should be added, subtracted. How much should be subtracted? 4,80,000. And under debit, debit against profit mode, subtract. Now, F is what? Profit. F is profit. It is C minus D minus E. What is the number? 47 lakhs 40,000. Profit is 47 lakh 40,000. What is profit? 47 lakh 40,000 is the profit. Everybody, are you understanding it or not? Now, my doubt is, tell me, the profit is same or different? What is the profit under marginal costing system? 46 lakhs 80,000. What about the absorption cost system? 47 lakh 40,000. Why 60,000 extra? Because of the fixed cost inside net stock. I will just write it later. Let's discuss it. What is the opening stock? 40,000. What is the closing stock? Net closing or net opening? Net closing, net debit or net credit? Net credit. Yes or no? No. Marginal costing, the net credit is at 40 rupees. Correct? Absorption, the net credit is how much rupees? 46. Which is having more credit? Absorption. By how much rupees? 6 rupees. For how many units? 10,000. 60,000 absorption costing profit is more. That's a reconciliation. Everybody, are you follow what I am saying? Can I proceed or not? Now, next step. Part 2 or part 3? Part 3. Right on next step. Part 3. Part 3. Reconciliation of the two profits. Suppose stock is not given, still they ask you to what? Reconcile. In that case, what you do? Don't adjust under absorption. You show it in what? Reconciliation. That's it. Are you following or not? Now, next part 3, reconciliation between two profits. Reconciliation between the two profits. Reconciliation between the two profits. Everybody, can I proceed? No. Is that right? Step 1. Step 1. Fixed cost inside net stock. Step 1. Fixed cost inside net stock. Underline that. Fixed cost inside net stock. Fixed cost inside net stock. Underline that. Can I proceed or not? No. Write down. Opening stock is equal to. Opening stock is equal to how many units? 40,000 units. Closing stock is equal to 50,000 units. Opening stock is equal to 40,000 units. Closing stock is equal to 50,000 units. Tell me net opening and net closing. Net closing stock is equal to 10,000 units. Net closing stock is equal to 10,000 units. Net closing stock is equal to 10,000 units. Right or not? No. Fixed cost in net closing stock is equal to. Fixed cost in net closing stock is equal to. Are you all following? Fixed cost in net closing stock is equal to. What into what? 10,000 units into 6. Fixed cost in net closing stock is equal to 10,000 units into 6 is equal to 60,000 rupees. Is equal to 60,000 rupees. Can I proceed? Step 2, reconciliation. Step 2, reconciliation. Step 2, reconciliation. Step 2, reconciliation. Underline that. Can I start or not? First, marginal costing profit. Marginal costing profit. Tell me the amount. What is marginal costing profit? 46 lakhs 80,000. Marginal costing profit 46 lakhs 80,000. Should I add fixed cost in net closing stock or subtract? Add. In a net credit, add fixed cost in net closing stock. Add fixed cost in net closing stock under absorption costing system. Add fixed cost in net closing stock under absorption costing system. Add fixed cost in net closing stock under absorption costing system. Right, what is the amount to be added? Amount column 60,000. 60,000. Last line. Profit as per absorption costing system. Last line. Profit as per absorption costing system. Profit as per absorption costing system. Tell me the amount. 47 lakhs 40,000. Profit as per absorption costing system 47 lakh 40,000. 47 lakh 40,000. Everybody, are you understanding it or not? No. With this, we have completed our discussion regarding this area called as marginal costing versus absorption costing. I did not do this during the marginal costing chapter. The reason is, at that time, we don't know overhead absorption. Right, Abba? Because we started marginal costing as soon as the cost sheet chapter started. Hence, I postponed that. Yes or no? I did not discuss even during the overhead chapter because I wanted you to get all the ideas about under overabsorption, both in overhead chapter, cost ledger, as well as the standard costing overhead variance, right or not? Now, at this juncture, when I told you, you are able to understand it much more easily or simply. This particular concept called as marginal versus absorption, a very, very important concept, comes in final also very frequently. Everybody having the clarity? Now, I think we have not written any notes for this, correct? Let me dictate you the brief notes. That is, notes for the reconciliation alone. Marginal absorption notes over, right or not? 11 points I dictated, correct? Now, just reconciliation, 2 or 3 points I'll dictate quickly and then go back to the standard costing chapter. Okay, now. That means I have completed the chapter marginal costing fully, correct? Except for one optional concept called as multiple break-even point, which may come in budgetary control. Apart from that, all other concept in marginal costing for IPCC level has been completed. Any problem from practice manual, examination, anything can just start solving. The chapter is completed. Can I proceed? No. Write down. Next. Notes. Write down. Notes. Shall we start up? Write down. Point number 1. Point number 1. The profit under marginal costing, the profit under marginal costing and absorption costing systems, the profit under marginal costing and absorption costing systems are different. The profits under marginal costing and absorption costing system are different because the fixed manufacturing overheads, in marginal costing system is actual, because the fixed manufacturing overheads in marginal costing system is actual. The fixed manufacturing overheads in marginal costing system is actual, but in absorption costing system is absorbed. Is it correct? Question mark. Is it correct? Is it correct? Otherwise, I gave a sentence. The profits are different. I said, why it is different? Fixed manufacturing overheads in marginal costing is actual. Fixed manufacturing overheads in absorption costing is what? Absorb. Hence it is different. Is the reason I gave you. Is it correct? Soluppa, yes or no? It is correct or wrong? No. Write down point number 2. No. Because while preparing absorption costing income statement, while preparing absorption costing income statement, we have adjusted for under our overabsorption. While preparing absorption costing income statement, we have adjusted for overabsorption. We have adjusted for under our overabsorption. We have adjusted for under our overabsorption, bringing the fixed manufacturing to actual. Bringing the fixed manufacturing overheads 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 to actual. Yeah, what's happening? What is happening here? Unda kalapaya madhyano. Can I proceed? No. Shall I proceed? Next. Point number 3. Then what is the reason for difference? Please. Shh. Point number 3. Then what is the reason for difference? Point number 3. Then what is the reason for difference? Then what is the reason for difference? Then what is the reason for difference? Question mark. Everybody are understanding the flow of the notes or not? First, I told the reason for difference. I asked you whether it is right or not. Then you said what? Say it is wrong. You gave the reason. Then I asked the next question. Then what is the reason for difference? Who should answer? I am only asking the question here. You are only telling me what answer. Now tell me the answer. What is the reason for difference? Stock valuation. Write down. Next. Continue writing as an answer for in the same point. The reason is the stock valuation. Answer right. The reason is the stock valuation. The reason is stock valuation. Full stop. Continue. Marginal costing values stock at. Marginal costing values stock at. Marginal costing values stock at what? Variable manufacturing cost. Marginal costing values stock at variable manufacturing cost, while absorption costing values at full manufacturing cost. While absorption costing values at full manufacturing cost. While absorption costing values at full manufacturing cost. Values at full manufacturing cost. Everybody having the clarity or not? Next. Point number, can I say? Next. Point number 4. Point number 4. The fixed cost inside the net stock is. The fixed cost inside the net stock is the reason for difference. The fixed cost inside the net stock is the reason for difference. The fixed cost inside the net stock is the reason for difference. Here there are 3 situations. Here there are 3 situations. Here there are 3 situations. Branch it into 3. First branch. Net stock 0. Net stock 0. When will have net stock 0? Opening stock is equal to closing stock or no stock at all. Okay, net stock is 0. Second branch. Net closing stock. Second branch. Net closing stock. Third branch is what? Net opening stock. Net closing stock, net opening stock. Net stock 0, tell me, which will show more profit? Both will show same profit, right? Put a down here mark and write, both system shows same profit. Put a down here mark and write, both systems shows same profit. Both systems shows same profit. Second branch, net closing stock, which shows more profit? Absorption shows more profit. Absorption system shows more profit. Absorption system shows more profit. Third branch is what? Net opening stock. Obviously, marginal costing system shows more profit. Marginal costing system shows more profit. Marginal costing system shows more profit. Tell me up to this, or I have the clarity or not? Last point. Point number 5. If there is no stock, and still reconciliation is asked to be done. If there is no stock and still reconciliation is asked to be done, Still, reconciliation is asked. ASKED, reconciliation is asked to be done. Reconciliation is asked to be done. Then, do not adjust. Then, do not adjust under or over absorption. Then, do not adjust under or over absorption. In absorption costing income statement, then do not adjust under or over absorption. In absorption costing income statement, do not adjust under or over absorption. In absorption costing income statement, but show it in reconciliation statement. 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 Okay. This topic of marginal versus absorption has now been completed. Can we go back to the standard costing chapter or not?